Chase, Wells, and Citi just made a silent move. Do this with silver immediately. Something huge just shifted in the metals world, and it's not happening at your local coin shop. Check this out. If you're interested in silver, click that link in the description. Money Metals is holding this contest. They're giving away 20 Silver Eagles. Every month they hold this contest. Last month, Kevin from Kentucky took home a 10th ounce of gold. Click that link I left down below. Be the next winner on that list. Now, look at this. Wells Fargo just came out saying they expect gold and silver to outperform stocks. That's a big statement. Banks like Wells don't usually cheerlead for metals. They live and breathe the stock market. But now they're warning investors that traditional portfolios might not keep up with hard assets like gold and silver. Think about that. When a major US bank publicly says metals could beat the S&P 500, it means big institutional money might start shifting into bullion or mining stocks. That kind of inflow could move markets fast. Here's the urgency. If Wells Fargo is right, then the average person who's been sitting on the sidelines, they might miss the start of the next metals run. It's like being outside the stadium when the home run happens. You'll hear the roar, but you won't catch that ball. This could be the kind of rotation movement we saw back in 2010 when silver doubled in less than a year because big money came flooding in all at once. Check out this twist. Citigroup is doing the opposite. While Wells is getting bullish, Citi just cut its short-term price forecast for both gold and silver. They now see gold closer to $3,800 an ounce instead of $4,000, and silver trending a bit lower too. They think inflation is cooling and the Fed might hold rates steady longer. They're saying, don't get too excited yet. That's what they're telling us. But here's a catch. Banks love to downplay metals right before they move. They do. They've done it before. Cautious forecasts while quietly positioning behind the scenes. So while Citi's headline says lower prices ahead, they might just be a setup, a way to cool off investor excitement before their trading desks start loading up again. It would not be a surprise. If you're a stacker, the real message here is expect turbulence. Short-term pain, maybe, but if Wells is right about the long game, that dip could be the last cheap entry point before metals make their next big leg up. This is the serious part. Citigroup's latest commodities market outlook says something that most people missed. They believe the gold and silver bull market is still alive, but it's changing shape. They're calling it a structural shift. Here's a translation. It's not just about inflation anymore. It's about how the world is rebuilding after years of high rates and supply shocks. Gold and silver aren't just fear trades now. That's not how it works. It's not just people buying because they're frightened of the world. Gold and silver are becoming long-term stores of value again. It's tied to a weaker dollar and rising demand from countries that are diversifying away from U.S. assets. That means your stack might not just be insurance anymore. It could be part of the next global reset in money itself. So while banks debate short-term numbers, the long-term trend is screaming one thing: hard assets, silver, gold, for you and I, it's back. Here's what it all means. Let these banks argue amongst themselves. You and I know that silver is the long game. They can have their short-term volatility all they want. We're holding for the long term. Get your own silver. Click that link in the description. Thank you, Money Metals Exchange, for sponsoring this channel. This is a great contest. Every month they're giving away 20 Silver Eagles. 20 Eagles every month. Click that link I left down below. Be the next winner and take home that silver. I'll see you on the next one.